Hi there, everybody. It's Ifti from Extreme Returns. So, quick background about myself. I qualified as a chartered management accountant many years ago. I love doing financial analysis. I've been doing that for all my working life. I did sales recruitment consultancy. I've set up my own multiple businesses, car hire, estate agency. So I'm an accountant, I'm an entrepreneur. I've worked in the corporate world. I've ticked all the boxes. So I've been doing a series on looking at the best traders on Etoro. I've done the top 10. So I thought I would now do all of the elite levels. Let's just take you over to here. So the one that I was going to do next is a chap called Dean FREDERICKS, really interesting guy. And I've got a lot of time for him, a lot of respect. Let's just take you through some of his background. And he said he's the highest yielding elite popular investor on Etoro, and he is by a long shot, because if you look at the 43 that we have, he comes up easily at number one, by far. And his returns have been absolutely amazing. You know, hats off to the gentleman, really has done well. He's aiming for 30%. He's done nearly 8 years worth in 1 year alone. And he looks at high growth, high dividend allocation, respect for you and your money, minimum copy time 3 months. And he's got average, better, best in terms of how much money you should put in. And this is what he said the money will be invested in. His stats this year so far, 13.6%, amazing, fantastic. Drawdown is quite high, as you'd expect from somebody who's got such high percentages. Only 664 copiers. That surprises me. Maybe it's because he's only been on the platform for around 18 months or so. But I think he deserves a lot more. Let's look at his portfolio. So what we're going to do is look at Dean's a bit difficult to look at in terms of the way I normally analyze a portfolio, because he's only got, in terms of stocks, individual stocks, Tesla, NextEra Energy, and Microsoft. All the rest are ETFs, plus one crypto. But let's take you through the stocks. Now, Tesla is an interesting one. So I normally head over to Stockopedia, as many of you will know. Very good site, can't recommend them highly enough. So when we type in Tesla to do a full financial breakdown, the quality of the company is 72. Now, quality, remember, are financial metrics like return on capital employed, return on equity, and operating margin. I've explained these multiple times before. Interesting to see that their revenue has been growing at an incredible rate, from only $3.2 billion in 2014, and it has tripled in 3 years, doubled, and then it keeps on just going higher and higher. Now, to go from 2020 to 2021, from a $31 billion base to increase it by 50% is amazing. I think this company obviously is going going far. PE ratio, now, in terms of value, it's really poor by the current financial metrics. This is why you've got lots of people saying, such polar opinions about Tesla. Look at the PE ratio, which is the ratio that most people use. 206 is incredibly high. I don't think there's another. Let's have a look. Is there anything else within the S&P index which talks about PE ratios being so high? Let's have a look. So PE ratio rolling. Oh, there is. Tesla isn't the most expensive, believe it or not. Valero Energy, Ventus, Expedia, 3 ahead of them. But if you look at the average, and all of those are really expensive now, look at the average for the PE ratio for the entire market, it's 21, just over. Look at the FTSE, it's 16. Look at the Hong Kong market, it's even cheaper, 11. Japan is at 16. So when people talk about they don't understand Tesla, they don't like it, this is one of the reasons there's haters for it. I would, and if you look at a cash flow basis, the PE ratio, stripping out the accounting aspects and just looking at cash, it's almost twice, well, it's more than twice as bad. It's 428. So on all financial metrics that most analysts are used to using, this company is way overpriced. I mean, it was overpriced probably early this year, yet it's increased, doubled and tripled, and God knows where it's going. Now, I think with companies like this, you have to look at different financial metrics, not just financial metrics. You have to really look at a bit more creatively in terms of the kind of way you analyze stocks. Now, one thing that I would do is encourage people not to look at the PE ratio in its isolation, but look at things like free cash flow, which I think is much more important. Now, Tesla is cash flow positive, and I think that's something which should be applauded. Yes, they've been making major losses, if you look there, but if you look, their losses on an operating basis has been coming down significantly, and they're very profitable at that basis, admittedly, not simply through selling cars, but selling credits to other car manufacturers, which they have to do legally. And that's where most of their money is coming from. However, in the future, they will be making money from the cars. They've put in all of the capital infrastructure and so on. But anyway, enough about Tesla. I could go on for a long time. Let's look at Microsoft. We've done that a number of times before. And Microsoft is obviously a company that most people know. Quality-wise, it's 99. Look at the return on capital employed, 24%, very good. Operating margin, fantastic at 38. They are increasing their revenues at a very healthy rate. In spite of being such a mature company, they're increasing their free cash flow by an even better rate, and they're sitting on $138 billion worth of cash, which I cannot imagine how much that is. And in terms of their share price, has been going, I mean, here it was 227, but it's been going sideways. There's been a few dips up and down, but it's a very stable company. And also Dean has got NextEra Energy. Let's have a quick look at them. So their market cap is only 100, I thought that said million, it's billion. It's huge, it's 118 billion. Quality 64, value 30, momentum 71, PE ratio 32. On a cash flow basis, it's even worse at 55. That bit I don't like, but I do like the fact that they pay a dividend, which is good. And Microsoft do as well, by the way. I like that. Operating margin, fantastic at nearly 28%. Return on capital employed is fairly poor. They've been growing not so fast. 2% compound annual rate is not very good. I would say that's a problem that needs to be addressed. However, free cash flow, while they're cash flow positive, they haven't been growing it fast enough. Now, for a company that is in electric power and renewable energy with the wind and the sun, I would have thought they would do better in terms of increasing their revenues, their margins, their what's their return on capital like? Yeah, it's been fairly stable. So I probably wouldn't keep this company in my portfolio. The quality isn't good enough. But having said that, how has it been doing financially? Pre-pandemic, it was 63, it's 82 now. It's been doing okay. How's it done for Dean? 13, 14%. Microsoft only 1%. Now Tesla has been his absolute. Now this is a reason Dean's done so well, largely because of Tesla and Bitcoin. Okay, so analyzing his portfolio, Dean Fredericks, here we go. So we've got 72 in terms of quality. So the average is 76. The average sample size is really small though. Value is only 18 and momentum is 80. I don't think we can take these numbers at face value because there's only such a small sample. He's only got 3 stocks. I haven't seen anybody else, any of the top traders only have 3 stocks in their portfolio. His portfolio is full, excuse me, of ETFs. 1, 2, 3, 4, 5, 6, 7, 8 ETFs. Now let's look at these ETFs. This one is the NASDAQ 100, and that's performed very well. What I've done is I've looked at the ETFs. So NASDAQ here, you can see nearly 49%, fantastic achievement for NASDAQ. IVV is just the S&P 500, and the S&P 500 has performed at 18%. Now, I've never seen before such a wide discrepancy between the S&P 500 and the NASDAQ 100. Simply put, NASDAQ 100 doesn't have financials in it, and it's very tech heavy. Whereas the S&P 500 has got a lot of companies that were affected by the pandemic negatively. Therefore, it dragged the whole S&P 500 down in spite of having the same tech companies as the NASDAQ 100. So if you strip out all of those companies, what you notice is such a big discrepancy. Right, what the ETFs has he got? He's also got this one, which is high dividend, and its performance has been poor. So in the last 2 out of 3 years, it's made a loss, and the total average return over 3 years is only 3.7%. Whereas if you compare it with the NASDAQ, 29%, and the S&P 500, 15%. Is it worth going after dividends when those kind of companies are performing so poorly? HDV is another dividend company, so ETF rather. So I don't know why he's got HDV and this one as well, when one of them actually has got much better results than the other. I would just stick with this one if I was him. Double this up and get rid of this one. ARC have got a very interesting company, Cathy Wood's boutique investment house. Now, he's got 2 ARC funds, KK and KW. Now, KK is more about, slightly more to do with healthcare. So they've got Invitee. I hold that stock as well, is their 3rd largest holding. And in their KW is the next generation, that's their main flagship fund. They've got very similar holdings, but Square at number 3. My thinking is, why hold both? When you look at the returns, they're almost identical. 66 versus 65. It's not that different. Why not, again, double up in either one? It doesn't matter which one you take. I would just do that. I wasn't able to find much figures historically on TAN, but SOX was interesting. This is the semiconductor ETF. Now, this one has done incredibly well. 52%, 62%, not so well in 2018. But the standout performer in all of this is ARC, and largely, as you can see, because they've got Tesla. But they've also got these companies that have done incredibly well. I don't know if they can repeat that performance. I hope so, because I'm holding it as well. Right, so the next thing I do is, when I look at top traders, I do an analysis. And one of the questions I ask is, how well do they communicate? How often do they communicate? So looking at his feed, his last post was 6 days ago. Well, 3 days ago, that one's pinned. 4 days ago. And when you count through all of them, he actually keeps in touch on a very regular basis. And I was counting up his feeds and they came to over 100. And he posts quite some interesting stuff as well. So I would give him the 3 points. So the way it works is if you've posted 100 times plus, you would get 3 points. Now, in terms of sector diversification, it's really difficult to look at his portfolio because he's only got 3 stocks. Normally, I would only do it on stocks. I have to give him 3 because he's got so many ETFs. And in terms of countries, what I like to see is more international exposure, not just the US. And I think when you look at Dean's portfolio, Tesla, US, we can't really say Bitcoins from anywhere in particular, but if you look at all of his ETFs, energy and the Microsoft stock as well, they're all based in or largely holding US companies. They're all US ETFs. I would actually mark him down for that and saying, look, I'd like to see more international exposure. And the reason for that, very simply, is I think, well, 2 reasons. One, there's so many opportunities outside of the US. And we've seen that with other top traders. Secondly, with the dollar being so weak, I think it's time to take advantage of that by having companies that have much more international exposure. In terms of cash holding, I've explained my reasons for this in the past, but less than 5% doesn't give people enough opportunity to buy when they need to. More than 10% means that the cash isn't doing anything; it's sitting there idle. The best, the optimum is 5 to 10%, according to experts. And Dean is sitting on no cash at all. I would mark him down for that as well. So the next I have is the number of companies. Now, having one stock is, having too few stocks is not good. It's too concentrated. Having too many is not good because it dilutes the returns. Ideally, you want between 15 and 25. If you add up the company he's got in his ETFs, it comes to thousands. I think he's holding too many ETFs. I think Dean is very capable of finding more opportunities amongst stocks. I really do. And I would say that he should have more courage and find more stocks to hold in his portfolio rather than ETFs, which are not doing, some of them aren't doing very well, but we'll come to that in a little while. So I would actually say he's got too many, and I would only give him 1 point for that. The next criteria I use is where are the profits coming from? So what you want to see is that from the greatest holdings, which is here, the greatest profits. And that's what we see, his 2 largest holdings, which are big. We don't often see in top traders 10% plus holdings in any individual asset. Here we do, and he's fully benefited. And a lot of his 246% here has been because of the growth of Tesla. Be interesting, actually. I think the vast majority of that has to do with that. In fact, you can take it 158% of that. 158% of that 246 is because of Tesla if he had the same holding throughout the year. So fantastic achievement. Well done on that. I would give him 3 marks out of 3 for that because I think that's a really good achievement. That's fantastic. Now, where are the losses coming from? What you want to see is the losses coming from your smallest positions. So his smallest position is SOX, ARC, W, and TAN. And his losses are coming from TAN, which is one of the 3 of his smallest position. So I'd give him some benefit there. Now, the point I was making earlier is that I think he's holding too many ETFs. Firstly, there's too much overlap, as we saw with the dividends. Secondly, I think you don't need to hold that many. Really don't. There's not much difference in returns, and also in terms of some of the makeup of these two ARC funds. Why not get rid of one of them and just put your money into, and he's got 9% in one of them and 5% in another, to be fair, and their returns have been fairly similar. So what I would like to see is from Dean, if I were to give him some advice, I would say first, more international, more stocks, less ETFs, and less similar ETFs as well. So if you're going to go for ETFs, why have so many which are so similar? So that's my take on Dean Fredericks. I think it would be almost impossible with this portfolio to repeat that for anybody. However, he's gone off to a storming start this year already, and good luck to him. Now, I would like to encourage many people as possible to subscribe to my YouTube channel. I'm making lots of videos about different top traders. I would also encourage people to copy me as well for $200. Doesn't take very much. And I know a lot of people are worried about overinflated prices. So why not copy my wife as well? She's Asian Tigers. She looks at purely Far Eastern companies plus India as well. And her stats, she's only been on the platform like me a very short time, are reasonable, with a low risk score of 4 already, 4% last year, 5% this year. My son is, my eldest son, also, his name is Muhammad. He works as a junior doctor, and he's got an account called the Green Dream. So he looks at solar, water, green transportation. His portfolio is full of those kind of companies. There's Tesla. And he's doing very well. Only joined earlier this month, 7%. My next son is the one to blame for getting us hooked onto eToro. He's the entrepreneur, and his portfolio is full of Forex. He's just closed some positions which were very profitable, 4%. Last month he had a big drawdown, and it's got a reasonable risk score as well of 5. And finally, there's my youngest, well, my third son. There's one even younger who's not eligible yet. He says, Dad, I can beat the banks, and that's all I want to do. So he's just looking at small returns by having low volatility companies and ETFs. So if you could add us to your watch list, even better, copy us for $200. I'd really appreciate it. It's been a pleasure doing these videos. They do take a lot of effort, a lot of time, and we're here to make, have a successful journey towards financial independence on eToro. I think eToro is wonderful. I think it's a future, and I would encourage everybody to get onto the system and learn how to trade and copy. This is Iftikharuddin, Ifti from Extreme Returns. Thank you very much for listening.